Hello, it's Jordan, and this video is being recorded on Thursday, April 21st, 2022. Thank you so much for joining me today. And in this video, I'm going to discuss the gold and silver Smackdown this week. But first, if you already haven't, make sure you subscribe to the channel. I'm going to have a lot more material coming in the weeks ahead. And if you're interested in gold, silver, precious metals, fact-based analysis, technical analysis, fundamental analysis, I highly suggest subscribing to this channel. Thank you so much. Now, let's get into the video. This shouldn't be so long. This is the only chart I have, and I'm just going to talk about the short-term technicals, well, medium-term technicals as well, on gold and silver. So first things first, gold had a nearly $300 move up from the beginning of February to the beginning of March. I think it was a $300 move in only 5 weeks or 5.5 weeks. So that sharp move, it also came up to a resistance point. You have the August 2020 peak. So you made it up there on a steep incline. There was going to be a correction, and gold sold off aggressively, losing $150, I think, in only 5 or 6 days of trading. So and in that scenario, in past interviews in the last couple of weeks, I was saying we could see a consolidation, range-bound action. This is going to last for at least a couple months, maybe 4, 5, 6 months. And I still feel that way. I mean, it's possible that you can see here the huge decline. Initially, that was an A decline, and then you have the B move up. Corrections in bull moves, they often have 3 legs. So that's where you get the A, B, C from. So the question is, the next leg lower, is that going to be a C leg? Where will the C leg bottom? And so looking at support for gold, obviously 1900 is significant, 1880 as well. The 200-day is at 1832. It's moving up, so that will be rising. The gap from the war move, I think, is at 1840. So to me, that's the worst-case scenario would be coming down to 1840, but 1880, 1900, those are really the levels to focus on. And also, if you look at a weekly chart, 1900 is pretty important. So the weekly chart for gold and silver, it's a little concerning, but it does align with my view here that this correction is going to continue, correction consolidation. This is going to continue for at least a couple more months. I mean, if we're looking at gold, you can see there's basically a cup from the August 2020 high, to the early March high. That's a cup. So this consolidation is a handle. I mean, there's a couple of cup and handle patterns on the gold chart. And this cup and handle pattern has a potential measured upside target to about 2,500. So that's what we're looking at. But that is an 18-month cup from August to March. And so you have an 18-month cup. That is going to take, that's the handle on 18-month cup is not going to be only 2 or 3 months. I mean, that's something that could take 7 months, 6 months, 5 months, something like that. So right now we are, we're a month and a half into it. So it's perfectly fine, perfectly reasonable that gold could correct here for several more months. It's nothing to worry about. Now, it looked, at least before this week, it looked possible that we could consolidate in, an upper range, maybe from 1900 to 2015, and that's still possible. But it's also possible that we could test 1880 and go a little bit below 1900. So the weekly close of 1900, the monthly close, that will be important to watch. So that's basically how I see it right now. I'm not taking into account how the miners are performing or sentiment indicators. But, this decline looks like a C leg, and the C leg is usually the worst in a correction. So that's what we're in. And that's just the fact of the matter, is that this is probably going to be range-bound over the coming months. But, who knows? Maybe it could dip down to 1840, fill that gap, and then that could be the end, and then it could start a leg higher. So there's several different scenarios. But moving on to silver, so we know that silver has been lagging gold. Silver had a nice bounce there after the A leg lower. rallied above the 200-day moving average, which is now, it's probably going to start sloping up. However, given my view that we're having a leg lower, that means that silver is probably going to go below the 200-day. So look at $23 for support. I think the 68% retracement from the, if we're looking at, those lows around the beginning of 2022, there's kind of a triple bottom there, up to the recent high, a 68% retracement, I believe, is just above 23. It might be 23.20, 23.30, something like that. So that's an area to focus on. And also, I think 1880 for gold. I think that is the 62% retracement of that big $300 move. So that's the way I see it. Nothing to be too alarmed about here. I mean, it sucks to see, we had a big move. We were consolidating. Miners are doing better. Now the miners got hit really hard today. So it sucks that more time is needed, but I promise it will be worth it for us in the end. And that's just what we have to understand. Fundamentally, I don't know. Maybe they're going to hike aggressively for a couple months here, and then they're going to have to stop later this year, and that's going to be the catalyst for gold and silver taking off again. Maybe it'll be something different. But these are the charts here and now. And look, with gold, it's in a rising bullish trend. The primary trend is higher. It's well above the 200-day moving average. The miners have been performing really well in relative terms. These are all good things when we're in a bit of a correction here. So that being said, that's all I have for this video. Let me know what you think. I'll do more of these in the near future. Thank you so much. And check out TheDailyGold.com/premium. I want to get you guys into the best stocks that I think are going to 5x and 7x over the next couple of years. Thank you.